Why would you ever want to set up a legal entity? LLC, S Corp, C Corp, etc. Our lesson on the board today is going to cover a couple of different entity types when it comes to legal entities. And so there's things that we can own ourselves, and then there's things that an entity can own, or a lot of the time people will set up an entity for a business structure. But the question is how well do you understand the difference between what benefits you get as an employee versus benefits you get as a business owner, the protection that you have of having an LLC or not having an LLC, or the question is, why would you ever want to set up a legal entity? LLC, S Corp, C Corp, etc. How does self-employment tax work? All of that. So those are the things that we're going to be covering in this probably 2 or more part series on legal entities. So today what we're going to talk about on the board is we're going to talk about being a sole proprietor and an LLC and the difference between the two. And so as a sole proprietor, we'll just separate this out like this. If I'm a sole proprietor, I have a business of some kind. Okay, even if it's just a little business, I'm selling. I have an Amazon business, or I have a lathe, and I'm turning, I'm making wooden pens in my garage, and so I want to, I've got to pay taxes, and I've got my expenses and things like that. And so if I'm a sole proprietor, I've got my business expenses. And then I've got my personal expenses over here. Now, a lot of personal expenses I have can be deductions because I'm 1099 now, and I have a business. And so certain expenses now become business expenses. So, for example, I might have a cell phone, or I might have a new computer that I need to get that's going to work better for my business. Those become deductible. Okay, I can deduct the business expenses, and obviously I cannot deduct my personal expenses. And so all the money that I earn, if we imagine, here's our entity here, we're just a sole proprietorship. All the money that I make inside my business, I deposit into the bank. But because I'm just a sole proprietor, I have no protection. I don't have any level of protection in my business where if somebody came and tried to, my pen didn't work and it exploded on them, or they're jotting something down in the car and they get in a car accident and they say that it's my pen's fault, and so they come after me, they sue me. So if I'm a sole proprietor, the downside to that is if I have no legal protection, no LLC, no S Corp, no C Corp, no anything like that, they could sue both my business and me personally, right? And so there's no legal protection. Then I get to the end of the year, and let's say that I've got a whole bunch of money left in my bank account. That's just excess money at the end of the year. What's going to happen is all that excess was income, and so I get to deduct my business expenses. But then if you add up what I have in the bank, even if it's from my business, and add that to my personal expenses at the end of the year, that's what is subject to 2 types of tax. One is income tax. Just because I leave the money in my business and didn't spend it doesn't mean that I don't have to pay taxes on it. If it's left there at the end of the year, that was income that I earned, and I just left it in the business, or I left it in the bank account, I'm still going to pay taxes on it. And then I've got all the personal expenses that were not deductible, so I pay income tax on everything except for what I was able to deduct in my business. But then I also, as a sole proprietor, I also pay self-employment tax. Self-employment tax, as of the time of this recording, is at 15.3%. And that's split up into two things. The 15.3% is 12.4% that goes to Social Security, and then 2.9% pays for Medicare. Okay? And so that adds up to be 15.3%. And so if I, after deductions and everything, I fall into the 12% tax bracket, then I've got to remember that's just federal taxes. I got to pay state taxes, and then on top of that, I'm going to pay self-employment tax of 15%. And so it might be 12 plus 5 plus 15. Okay? And so that's how a sole proprietorship works. And it's totally fine to combine business and personal expenses, and they're just kind of mixing around, and I pay for my little business and I pay for my personal expenses, and it all comes from the same bank account. Okay? And a lot of people do it that way. You know, a lot of people have a little side business, a side hustle, and that's just kind of where it all can be mixed together. Okay? So that is a sole proprietorship. Now, let's talk about an LLC. Okay, what does LLC stand for? A limited liability company. Okay, probably the top reason why people would set up an LLC is for the protection that it gives them, where now their personal business life, etc., their personal stuffs are their personal business. Their personal expenses, their personal life, their personal money is completely separate, in separate entities, in separate bank accounts, in separate everything from the business. And so in an LLC, instead of there being, you know, these gaps where people could come in and try to sue me, what an LLC does is it provides legal protection for the business assets. And in order to do that, I have to keep the money separate. And so as I make money, say from a job, if I have a job and I make money from that, that needs to go into bank number 1. But then from the business that I have, or let's say I have a real estate property that the LLC owns, or I have, you know, I set up that LLC, that entity, to own something else. And so a good way to think about it is a lot of business entities have like their own Social Security number. And so it's almost like a good way to imagine, you know, they have their own identification number of some kind that specifies that it's separate from a person. And so you almost imagine it as a person that's like connected to you. So if I have an LLC, I control the LLC, but the LLC is not me. And so the LLC owns some things. So it's almost like my business partner owns all these different things, but then I'm the owner of the whole company, and this is my business partner. And so it's a totally separate person, a totally separate thing, but then another one of the benefits of having this business partner, this entity, is that it never dies. And so if I die, that operating agreement that I create, that entity that I create, could last for decades, centuries, however long that it can continue. Okay? And so it's almost like just having another person. So I don't own the assets, the LLC, or this person over here owns the assets. So if somebody comes and sues me, not that this is all about getting sued, obviously, but if someone does come after me, this entity over here is completely separate. Okay? So then I have, if I have my job, all the income I make from my job has to go into bank account number 1, and then any money that I make from my business, you know, selling whatever I sell or doing whatever I do, that's got to go into a different bank account. Or I have to do some crazy accounting to make sure that the two stay separate. Because if I'm mixing the two, which unfortunately a lot of people that do set up an LLC do this, where they're just, you know, mixing the money all over the place, In the securities industry, that's commingling my own personal funds, right? And so technically, and again, this is not me giving tax advice. I am not a CPA. I am not a tax professional. Obviously, everybody's situation is very different, but this is just understanding what it is, how it works, getting a base knowledge of what it is so that I can go have a competent conversation with my tax professional, CPA, whatever you're going to do. Okay, so if my business, though, is going to use personal money, technically, I could classify that as a loan that I'm taking from me. So here's this entity over here that needs to make more pens. I can loan my personal money to it, or if I refinance my house, take equity out of my house to put it into my business, technically I'm loaning this entity over here money personally, even though I'm controlling both. Okay? So the expenses need to stay separate. Then, of course, when I get to the end of the year, all taxes are figured at the end of the day on a personal tax return, but then the business one is done first, and then after that's all settled and said and done, then that passes over to your personal return. And so from the business, all the expenses that I have are tax deductible. And then, of course, if I'm paying myself from my job or I'm paying myself from my business, that's all personal expenses, but then all of my personal expenses that I have, those are not deductible. But again, I do need to keep these two things, I need to keep them separate, my personal and my business. So I get to the end of the year, they do all my taxes, and let's say you know, they're going to have the corporate deadline is March 15th. And then sometimes there's the exception of like the 17th or whatever. And then you have the personal returns that it's April 15th is tax day for personal, for businesses. I actually don't know, you know what? Now that I say that out loud, I know that S-Corps, you know, corporations are going to have the deadline by March 15th, but not sure on an LLC. Guess I should have looked that up. Okay. So we'll find that out. But a lot businesses will have a different deadline. That's not the most important thing. So business expenses are deductible. Personal expenses are not. At the end of the year, if I have money left over in the business, whatever is excess money that is in the business, then that's going to be subject to tax at the end of the year because it's still there, plus all the things I wasn't able to deduct, the income that I made is also subject to both taxes, income tax plus self-employment tax. So the biggest thing that an LLC does is it separates the two entities, personal and business, and then also gives me the legal protection to protect me from you know, gives me that protection. Well, why it's called a limited liability company, an LLC. So that is our lesson on the board today. Thank you for joining us for the Impact School of Money. This was lesson number 50. So thank you again. Have an awesome day. Share this with somebody that needs it. See you later. Class dismissed.